Hello everyone, hello traders. Hope everyone had a wonderful weekend. Can you see the screen? Can you hear my voice fine? It's everything okay? Please let me know. Okay, so seems like we are good to go. So before I begin, just heads up for this US single stock service. As you know, not recently, but for the last few months, we had these US single stocks in beta versions. I was providing a lot of free charts, free articles to everyone who applied for this access, but this is now those doors for the free access will now close. So if you are looking for the final update, it was released just an hour back before the market opens, so I decided to provide some fresh free content, so make sure to check this out. You can either look into this still for the next 24 hours within hours premium services, or obviously it's been also uploaded to YouTube. So if you're interested, make sure to check this out. Some early bird prices are definitely worth to consider if you, of course, are paying attention to US single stocks, where obviously I will also cover some major US indexes as well. Now, as you know, last week, at the beginning of the week, basically for most of the week, we have seen some very nice bearish price action, and then on Friday we have seen a very strong rebound. And as you know, whenever we see a very strong moves on Friday, it means that this kind of a price action could resume going to Monday, Tuesday sessions. And so far what market has done, it made a very nice close here, so it looks like that the bulls are here and we have to respect, and finally we will get this another push to the upside. Also, if you will switch to weekly candlesticks formation, I talked about this in our stocks video update as well. Notice that we had several spikes here. So it means that bears are trying to fight here, but they are always retraced. But so for now, it looks like that as long as we are trading above that most recent spikes, of course, based on candlesticks formations, it looks like that we should expect another push higher. But if you zoom out a little bit, you can still see that despite higher prices, bulls are struggling. They're not that strong anymore like they have been before. So I still think that this could be the fifth wave and that we could have an ending diagonal, so possibly we are going to see another push higher. But then again, as I said already a few times, in the mid of February we should be very careful, because that's when, based on seasonality, we could see some important tops. So considering how the pattern looks here, of course for now it looks still that we are in risk on mode, but just let's see what happens up there. Be careful rather than surprised, right? So for now, it looks like that there is still some risk on bullish momentum, and commodity currencies are doing pretty well. I like the fact how commodity currencies like Aussie and Kiwi, they held up pretty well last week, even when we have seen this sell-off on stocks. So it's not a surprise that we are seeing right now Aussie still making a very nice push higher. And we have been looking at these wave structures already last week. We said also that everybody is much more hawkish compared to other central banks, and that's something that could drive the pair higher. And so far we have seen a very nice break out of this corrective channel, and looks like that we are now headed into this FIB resistance zone. So for now, commodity currencies are still looking fine. Dollar is bearish versus commodity currencies, and even it's turning down versus euro and pound today as well. But once those commodity currencies will see a push to new highs, I still think that we should be very careful, especially because that's when this five-wave rise and impulsive sequence on Aussie from November 21st 2025 could come to an end. And if we are looking at currency that is very strong and could be moving into some kind of a resistance later on, let's say in next week, then of course, or still let's say this month, then of course this could mean that other currencies which are much weaker should also expect some challenges versus the US dollar. And if you just let me mute my phone. Okay, airplane mode is on. Okay, so with that being said, I mean, if Aussie would really see a push to new highs here, at the same time, if the S&P 500 will be trading at new highs, that's when we should be very, very careful and see what this will cause. Maybe if we get some pullbacks here on other pairs. Keep in mind that when looking at the dollar, we are in a final fifth wave here, right? That made already nice spike here to a new low before the market rebound. And if you look here on a smaller time frame, on the 4 hour, maybe even this can even be counted as an impulse from that most recent lows, right? So with this kind of a price action, I mean, it's hard for me to say that that was a counter trend movement. Of course, it still can be, because you will not have each rebound as a very nice clear free wave structures, but I always try to focus with basics. So the basics suggest that this can be counted in 5 waves because we don't have any kind of a serious overlaps here. So that's something that we have to consider. So I'm just wondering if maybe stocks will see more upside while we are progressing slightly lower to complete this ABC pullback. But notice that this intraday pullback has even room for 96.50, because that's still only first leg of a free wave drop. So for the start of this week, what we are seeing is that while this dollar is coming to the downside across the board, we have very nice risk on flows that will most likely drive the prices even higher until we see at least 3 waves down here on this dollar index. And then let's see what happens down there. Certainly, if we maybe by Wednesday, Thursday, we see 3 waves down here into that area, and then in the second half of the week, I would not be surprised to market to see a rebound. I just simply do not expect that market will continue straight to the upside from Monday to Friday in one leg. I just think that there will be some rallies in the meantime. Of course, there could be opportunities still if we're looking some intraday trades on the dollar, on the short of the dollars, on dollar shorts. There could be still some interesting opportunities like on Aussie or Kiwi, as I said, on pullbacks, and these are the most interesting ones for more gains while the dollar is looking weak. But whenever dollar is going to be strong, keep in mind that I will still pay very, very close attention to euro dollar. We will just see if maybe the resistance around 1.2 will hold or no. If we will see that prices will keep moving to the upside, then there is a real chance that maybe we even have an ending diagonal here on the euro dollar, but still this yellow box will remain as a very important upward projection here. So I still think that of course euro dollar this year, in the first half of this year, we will see some kind of a topping formation, and maybe this week will be quite important to see if that stop is already in place or no. It really depends what kind of a recovery we get towards 1.2 level on a smaller time frame. And if you look at the smaller time frame here, so let's assume that maybe that's only a free wave rise will unfold. Of course, there is still room for more upside towards the 61.8%, which is slightly below 1.2 level. So hold this zone up there will be very important. But as I've been mentioning with our intraday updates, for now that's still only one leg of a minimum free wave recovery. So more upside here within this recovery will likely unfold. Looking at cable, now cable, I mean pound in general has been one of the weakest. So it's very probable, even if the euro dollar would retest the highs, if Aussie, Kiwi will, all of them will continue to push higher for a fifth wave to complete the higher degree bullish trend. It's still possible that pound will not reach new highs because it was very weak. And still, this looks like a 5 waves down, and now you're on counter trend movement. And once again, that's only first leg of a 3-wave recovery, so we could see a bit more upside or at least sideways price action before market will stop at the resistance, ideally at the previous 4th wave here around 1.3736. so that's the level to watch on the downside whenever we broke this lower trend line support, right, connected from that 2025 November lows. I think that's when we should be worried about more weakness. But at least what I see right now, I mean, it's definitely, to me, it looks like that this market will stay in consolidation, likely retest lower prices while the market is trading below these most recent highs. Now, looking at crude oil is chopping around a bit, but if you will look at the smaller time frame, notice that that was a gap that occurred around 1-2 weeks back, and notice that this gap has later on been filled, and this happened only with 3-wave rise. So in my opinion, there is still a chance that market will retest lower prices, and what I'm looking at is that was possibly a wedge formation leading diagonal, and now we are in a counter trend movement. And you can see that there was a lot of activity with swing highs and swing lows right around $60 per barrel, right? So that's, even if you zoom out and look back from, let's say, from end of October, so that's a pretty big level. Maybe we will retest it, but then if we see this yellow zone, watch out for potential stabilization and a new push higher. What I really think it's happening here is that we are going to see minimum 3-wave rally from the most recent lows, and that higher degree consolidation here will keep going, but still will keep prices limited at the upper side of the range. If you look back from April of 2025, so that was, as you know, one of the most important reversals that occurred last year on a lot of markets, and a lot of markets already retraced towards those April lows when Trump made all of these changes to tariffs. And whenever this happened, well, usually those April lows, important levels, can cause a new important swings. Well, a lot of liquidations at major swing highs, swing lows will occur. Now, looking at gold, as you know, gold has most likely stepped into higher degree consolidation. There were a lot of optimism up there. So simply put, I mean, market will never just keep moving to the upside. There will be massive liquidations on the way up. It's same with metals, especially commodities. They are can be very volatile. So it's not really surprised that we have seen this kind of a move happening. Now, there are new, most likely there will be new position adjustment that will look for opportunities on metals after this nice pullback. But if you are familiar with the Elliott wave principle, then maybe you just still should be aware that even if we get another push to the upside here, there is still room for wave C to show up, right? Because based on terminology from Elliott waves, whenever we see sharp reversal from the highs, this can be first leg of a minimum 3-wave drop. And usually wave C, whenever wave A is that strong and sharp, right? You see a very strong sharp wave A, then wave B rise. Wave C can be much slower, and that's where you will see divergence between wave A and wave C swing lows. Usually bearish momentum will start decrease, and that's when everyone will again turn bearish at a new swing low, but that's when we could expect a rebound, right? So that would be the ideal scenario, that market would later on bottom down here. So if that's really the case, then maybe watch out what will happen around the 61, maybe the 78.6% fib levels. So this could be a pretty important limited upside range. But if you're looking maybe for any kind of trading ideas here, on if you are trading on both sides and you're more aggressive intraday trader, then for any kind of a weakness, of course, I would assume that silver could see much more pain, because whenever gold silver ratio is moving to the upside, right, that means that metals in general are in a correction. And if you will go to the smaller time frame. From that lows you can see 5 waves up, and now looks like that we could be in a free wave retracement. So in the near term we could see some pullback here. It means that metals could stay sideways, but after a retracement we would expect more upside. So if gold silver ratio is really going to see more gains here, let me try to draw it here like this, then of course it means that most likely silver and even gold of course will remain limited on the upside. But still, very nice resistance is not here just yet. I think that 92, maybe even 100 level is something to watch. It's going to be a very important psychological level as well. So let's see what happens up there. In the near term, as I said, maybe there will be a chance for some more upside. Also, let me check the weekly daily candlesticks. We can hide this, switch to candlesticks. We had, you can see that on a weekly we have some spike lows, spike highs, and that's usually means that you are here in the neutral stage. Let me check daily chart. Nothing really, I mean, maybe the most important here is that we had this bearish engulfing, then continuation lower, but market finished above the previous swing highs, and now it even gapped higher. And with the dollar that is now in this pullback, as we discussed here on the dollar index, it would make me think that after maybe some gap fill here on a smaller time frame around 77.50, this could be quite nice support, and then maybe we could see some more upside. So I think that after some intraday retracement, there is a real chance, especially if dollar will stay weak, that we will see this yellow box still tested in the maybe this month. Now let's take a look on cryptocurrencies. As you know, cryptocurrencies have seen, if you zoom out here, this is liquidations. You can see that the most liquidations occurred here, interestingly enough, at the highs. Okay, so you know that there were market was extremely bullish up here if there was the most liquidations, despite prices making a much deeper pullback later on. So in my opinion, it means that we are now approaching some interesting levels. We know that there were a lot of fear that spread last week with cryptos selling off, and what we have seen is the second largest liquidations day on Bitcoin, when this one fell towards 60k. So obviously we are approaching some period where we could see some stabilization. Also, if you look at the short-term holders, you can see spikes here, which were very important, and we talked about this in the past, to look for potential at least local low, right? So this not only once, but we have seen two spikes here. Firstly, when market most likely broke below 80k, which we were looking in the past, but that's when first liquidations of short-term holders occurred. But then even more when price was keep moving to the downside. So it means that at least in the for let's say for the near term, we certainly reached some very nice extreme levels here, and that's why it's not really surprised that market has made this some rebound short covering rally, if you wish. But if you look here at liquidations heat map, notice that we still have some very big orders here around 50k, right? So if you look, zoom out a little bit, we have several retests of this 50k level in the past before market pushed higher. So maybe that's something to watch. Not really, it doesn't really mean that we will see straight continuation to these lows, but if we will touch it here in the next few weeks, few months, I still think that this could be quite attractive, interesting support, because 50k is also, let me check, 50k, I will not do it here. 50k would then be, let me be more precise here. I'm just wondering what was the exact percentages here. 50k would then be 60% of retracement from that high if we really would reach that level. Also is a psychological level, and keep in mind that this would then be quite close to the previous measurements, where each correction was between 70 to 80%. So when it comes to bigger cycles, it's definitely much more appropriate maybe to watch and keep in mind that on these potential still deeper support levels. And not only because of some liquidation pools that I see down there, but also because from an Elliott wave perspective, notice that we have 5 waves down, right? We stopped at the channel support line, we could see some rebound, but then later on, after this rebound, we could see more weakness. But at least for the near term, we could maybe retest slightly higher prices because we have this unfilled gap that we also talked last week here, around 83k. So this could be maybe the next important resistance if the market will move into that area. But what is concerning maybe is that these Trump lows and the previous highs that I was looking as a very important level did not provide any kind of a rebound. We just completely moved through it. So that's why I think that we will most likely just consolidate further, maybe slightly retest higher resistance levels before market will continue and make another cycle to the downside, especially if the same time we would see some major dollar recovery and some also push to the downside on stocks. Keep in mind that all of these cryptocurrencies bear market occurred despite despite Fed cutting the rates. Okay, so I'm just not sure how will this market be able to pick up and turn back into bullish mode when they could possibly be closer to hold rather than cut rates further, right? So that's something that we have to consider. Of course, that doesn't mean that market cannot rebound. It can rebound, but even if we go back to 90k level, it doesn't necessarily mean that you are back in a bull run. Keep in mind that we are still we are counting 12 months from October 2025 top when we projected end of this crypto bull run. So we still have 6, 7, 8 months left before this market will complete correction. But of course, corrections will unfold in different forms among different currencies, and maybe some will already made a new low, some will not. So you will have to be very selective. But that's why maybe keeping an eye on a higher degree time frame charts and big levels will be even more important than ever before. Also, when looking at the Ethereum, I still think that very important level on this one should be around this one. As you can see, that's a Trump low here around 1,300. So I still think that we will reach this level, and this could be quite attractive first interesting support. Deeper support would be around 900, which is this low from May of 2022. So if you're looking maybe to start scaling in on the Ethereum, have some longer term plan, then just keep in mind that that's maybe something to watch for when the market could possibly make even lower price action. But Bitcoin Cash, for example, well, this one is looking quite interesting, at least for, let's say, for the next few days, for this week if you wish. Well, we have been looking for a flat correction. We call this a reversal up here because market was really struggling here. It made plenty of overlaps within this recovery, and then just temporarily it spiked to a new high before market reversed lower quite aggressively for wave C, which is usually the case. And what I like about this one is that we spiked below wave A and now recovering. So if we have to identify it, short-term invalidation level is definitely this one right here at 424. So for the near term, if you will watch some interesting levels here on these intraday pullbacks, then maybe that's something. This one could be quite attractive, interesting if we will zoom out and look for the smaller cycles. And by the way, we of course are updating our members as well with the intraday structures on all of the markets that I'm covering right now, right here. The final one will be Solana. As you know, we have been looking for Solana retracement. We said that ABC pullback has a very nice support around $80, and we reached this level. So technically, it's definitely very important, very nice level for potential stabilization. But if I identify the support, it doesn't mean that market will turn higher straight from here. So what would be really important is to see a recovery back here above 117. Why 117? Because you never know how deep and how far can be the current wave C. What if this is just a subwave 1, subwave 2, and you are now in a wave 3 sell-off? So if you're looking again for some opportunities that will have maybe better risk reward setups, you definitely want more important low to be triggered here. And then if you see a rebound towards 120, then of course you could be looking for some potential opportunities on pullbacks with very well defined invalidation levels, obviously at wave C swing low. That's more from a trading perspective. From an investment perspective, of course, this level appears to be very attractive, very interesting one, but just keep in mind that, as I said earlier, if dollar would really see some serious rebound this year, you certainly have to be prepared for some more pain on cryptocurrencies, and that's why there's always you need to have a proper structured portfolio when it comes to cryptos and compare them also to other assets, obviously. Okay, traders, that was what I had for today on my list. Someone is asking for Kiwi. Okay, I can make a real and quick look to Kiwi. Where are you? You are here. So regarding Kiwi, as you know, we have been looking at this one closely for the last several weeks. We said that we are in impulsive bullish sequence, and we were looking and still looking for a retest of this high. So this one is obviously matching with Aussie dollar. As I said, commodity currencies are strong, and looks like that Kiwi is now underway to new high. We have seen a very nice retest, almost textbook pattern here, with the retest of this upper line of base channel, which usually is the case whenever, or not usually is the case, it's worth to watch whenever the price pulls back towards this trend line when you have the broken base channel. So this same line obviously could be very important on setbacks, especially when you have movement in three waves. And now with stocks recovering, of course, that's something that could keep Kiwi in uptrend. But as I said, for these new highs, and then let's see what happens up there. We know that after 5 waves, market should make at least 3 wave retracement. It doesn't mean that it should make from here, or even higher prices. It's just important to understand what should be the next cycle. But when this next cycle or pullback will show up, that's yet to be discovered. But still, whenever you see 5 waves up, be aware of a slowdown or reversal. That's when maybe dollar could see some interesting rebound, not only against the Kiwi, but also against other currencies as well, especially, as I said, if stocks would really complete this trend up here. Traders, thank you very much for your attention. I hope that you will have a very interesting week, and again, talk to you soon. And whoa, don't forget, if you love the US single stocks, make sure to check our free stock analysis posted on YouTube or in our premium services here, because doors will close this week. Bye.